Traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back. I'm going to go ahead and, well, I don't need to get rid of that right now. We've obviously had some issues with GoToWebinar today, so hopefully we've got those fixed. Here's the weirdest thing this morning. Okay, so we're going to have to cruise through this analysis, but I don't think it's going to be too difficult this morning. So here's the euro dollar. The thing about the euro is now that we've broken below 108, 108 is going to be key resistance on the way up. Let me delete this. Let me delete that. Let's delete that. Let's delete that. We don't need any of that. Okay. So now we are boxed in this, 108 to 107.10 level. The risks are if we do, and let's actually, shoot, I didn't want to do that. Let's grab that. Okay, we're at a 50% retracement of the range. Okay, basically 50% of our range. So we're smack dab in the mid-range, if you will. So rallies to 108 are probably going to be capped, and as long as we stay above this 1710, it's going to be probably pretty well supported. Below 1.0710, and that's going to reignite dollar bulls. And then remember, you guys, the risk is here, and I'm gonna reiterate this. The risk is here if we break above this level, which that would be basically, that would be basically this 10710. That puts this double, triple top in play. You got this double top neckline. There's a strong possibility at that point that we see new lows. Again, that's where we got this double bottom, and we might hit new highs. So over, like, I wouldn't say like tomorrow. I would say over probably the next week or two. One of the things about the dollar, and let me take a step back for a second before I do any more analysis. By the way, my nose is runny. It took me 3 hours to get to sleep last night. It's one of those, I just sat in bed and just toss and turn for hours. I went to bed on time, and I just it was miserable. Hold on really fast. Like I said, that doesn't normally happen to me. I'm one of those people. I usually shut. When I was in the military, I did nuclear weapon guard duty in the island of Guam. Okay, I used to be able to, and this is no joke. I could literally be standing up if I was tired enough and I wanted to. I could be standing up and I could fall asleep for like 2 minutes at a time, standing up. No joke. So that'd be like a power nap for me when I was on guard duty in the middle of the night. Anyway, yeah, that's safe, isn't it? Safe. Man, I tell you, I'm just one of those people. I can pretty much fall asleep at a moment's notice if I need to. But last night was not the case. So if I sound miserable today, that's the reason why. Okay, back to this. So the euro dollar, the risk is if we break through this 107.10, I think that's going to expose, obviously some downside here. There's a lot of work to do, but theoretically, that double bottom could create a brand new low in the euro. And again, I would be somebody who would like to short the euro or short the dollar index on a rally into new highs. Okay, I would if we get it. That's a if. Okay, so what I wanted to say. So here, do you know what the reason that the dollar could hit new highs from here? Do you know what the specific reason is? And I'll say this, you don't even have to answer. You can answer in your own head if you want to. It's because expectations of a rate hike into 2016 are uncalled for. Now, does that mean that we're going to raise rates in 2015 in June? Not necessarily, but there were many economists and analysts that are like, oh, we're not even raising rates this year. Those goalposts move in a little bit. So all the market has to do is start adjusting that we'll be raising rates maybe in September or before that, and the dollar will rip higher again. It's all based on expectations. Okay. So the day that we actually raise rates, the dollar may actually go down as a buy the rumor, sell the news type of event. But I'm just saying that if expectations are shifting back to the Fed raising rates sooner rather than later, um, uh, that could actually, that can actually push the dollar higher from here. Okay. So anyway, that's not what we're dealing with right now. What we're dealing with is 107.10 and 108, period. And we are in a range environment. All right, let's go over to the cable. God, we got to get through this stuff. So the Bank of England rate left rates unchanged. I used to remember when the Bank of England rate decisions used to be the funnest days. Okay, look at that. 127% extension came down, hit support yesterday. By the way, we wrote down 148.50. Do you remember that? Go look at your bias chart from yesterday. We wrote down 148.50. Do you know what that low was? 148.50. That was pretty good. Come on. You have to admit that was pretty good. Actually, it was 148.50 on the spike. We were right here yesterday. This is, we were here yesterday morning during the morning edge. We were right here and we're like, oh, resistance is going to be at 149.50 and maybe 150. Support down at 48.50. We drew it all out, remember? Didn't quite hit 150, but we hit 148.50. Okay. We eventually broke overnight. Look at the cable. This is so typical cable. So the cable takes out new lows, rips back like it's nobody's business. Okay, so I guess the question is, what do you do with the cable now? And this is one of the reasons why I haven't been doing a lot with the cable, because I don't know. Let's remove that line. I mean, what do you do with this thing? I don't even know what you do with it. Looking at it, I have no idea. Today, I mean, 148.50, 147.35. I don't even know what to do. Okay, there you go. What's next? Swissy. Swissy. So the Swissy kind of, I'm a little upset that it's kind of it's leaving without me, if you will. So um, this is one of those that this is a great example of, if we break 147.50, this thing is going to rip higher, because this is an example of a good range extension right here. Double bottom, just like the rest of these dollar pairs, right? We'll rip right back to parity. Okay. 97.50, huge resistance. 97.50, huge resistance. Hold on. So where is support for this thing? No, not correct. Not correct. Hard to say. Um, I guess right here, which would be 96.70. Excuse me 1 second, guys. Okay, I'm back. So range. Somebody asked me about the dollar yen. Looks like it's rolling over, they say. Yeah, I mean we've got key resistance here, 120.35. It's really key resistance, right? Once again, 120.35. That's a key level of resistance, and support is, oh, hold on a second. That's the 50% retracement, which is 119.7. Oh, this is going to be really key support. Hold on. There's a big confluence down here. So if we take this trend line, right, that's going to come in right here. That's previous support right there. It's 50% retracement. Be huge support on the way back down. 119.70. So if 119.70 breaks, that should take us back down to 119. Still in a range. Dollar Canadian. Okay, so we have Canadian data today. Nick asked, "Hey Blake, what's my risk on the dollar Canadian?" I'm not risking below 124.50 personally on this particular trade because that's where the 618 is. See your 618. It's down here. I just don't feel that I need to risk that much being long. Starting to buy the dollar Canadian down at these levels. But remember, you have a daily hammer yesterday. Daily hammer after a false breakdown should result in higher prices today, or at least the support to be buying on dips. So that's why I'm buying on dips now. Question is, how far are we going to dip? I had my buy order overnight, not knowing where this high was going to be. Because remember, last night we were here. Yesterday afternoon we were here. So I had my buy orders below 125 at 124.97, right? Because I figured if we broke through this support, it's going to stop some people out, and then I can get long down here. I had no fibs drawn. But now that we've peaked, your 38% retracements here, your 50% retracements 124.80, then your 618 is 124.60. And if you follow like a Fibonacci fade analysis, which is a strategy that I employ, you could be buying, at a couple different levels down here on the way back down. So 125 is going to be support. Below that, 124.80. Okay. If you don't know what I was just talking about, you have to buy the strategies webinar. You don't have to. I'm just saying, I have better understanding of what I do. It's $30. 25. There you go. And resistance is going to be obviously 125.80. Okay. And we are in a range environment too. Let's go over the Kiwi. Kiwi is knocking its head up against resistance here. This is really, I mean, right here is key resistance. But if we break above 76, 76.30, that's going to be a pretty clean breakout. I might actually have to go along the Kiwi if that happens. Yeah, I mean, the Kiwi is trying. It's trying. Still has a lot of work to do here. Okay. First of all, resistance 76.30. Support. Well, I mean, this would be huge support on the way down. I just don't know if we're going to make it all the way down here. Um, hmm. I mean, the overnight low, or that spike low there, is that even real? I guess it was. What happened there? Was it at the end of the day yesterday? Huh. Okay. 75 and a quarter should offer really good support today. If we can make it down there, that should be decent support. Let's go take a look at the Aussie. So the Aussie, we are at the 50% retracement, so you guys know, of this last move down. Okay, 50% retracement. Channel resistance comes into play about 77.50. So another, actually 77. We'll just call it 77.60. You got your 618 right above that. We keep grinding higher into this range. So I mean, we're hitting new highs here. So we can't rule out a move to 77.60 today. Support. So any dip down to 76.50, 76.30, any dip down to 76 and change. Hmm. And the bottom lines we're making higher highs and higher lows. So the 76 spike low here, 76.60 is going to be important. Okay, when I get back, I'm going to do the dollar index. We'll take a look at the Nordic currencies, um, and then we'll go from there. But right now, I'm just going to leave that as it is here. And there's, for some reason, people have lost sound. We had sound issues this morning. Um, so I'll be back in a few moments. When I come back, we'll continue on with the dollar index, and then I will look at a couple other currencies. Then I'll take some questions. So don't go anywhere. Thanks everybody for being here. Be right back. Hi guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we got to do the dollar index really quick. Um, so, uh, all right. So let's revisit a few things. Let me get rid of this. So yesterday we talked about the dollar index and the possibility of us breaking out of the wedge and breaking higher. Hey, if the FOMC minutes are more hawkish than the market was expecting, because like I said, I think I told you yesterday um, the risk was that the market was too expecting too dovish of FOMC meeting minutes. Everybody was expecting it. And I said the risk was that they weren't going to be as dovish as people were expecting. And that was exactly what happened with the dollar. So the dollar ripped higher. So now the question is, where do we go from here? And like I said, if we hit these, if we break through this level here, this resistance, you're talking a double bottom, range extension could take us into new highs eventually. So at the moment, that's a 618 right here too. Okay, so I think what we have to pay very close attention to is 98.80. That is the 618 retracement. That also is near the previous highs, which were 98. Well, we have a 66, 98.66 right there. 98.64. So really, I'm going to write down 98.80. Okay. If this breaks, look out. That would be the euro below 107. That's what would be happening. Okay. I don't necessarily um, think that's going to happen, but if it does, like I said, look out. So 98.80, we are still in a range support for the dollar. This would be back down here, retesting this trend line. So that would be at 97.80. We're at 98.12 right now. 97.80. And let's take a real quick look at, I want to take a look at I got stopped out of my pound Aussie overnight. So I did get stopped out of the pound Aussie. I did not reverse it, which I thought I put in an order to short, like to stop and reverse, but I didn't. So I got it stopped out of the pound Aussie overnight. The pound Aussie, look out. I mean, we're coming down to pretty key support down here, which will be around 190.50 or so. It's trendline support. So pretty key support as we approach it. What else? Oh, I wanted to go over the peso. Let's take a look at it. Here's the peso. Pretty quiet. Nothing happening there. Norwegian krona. Inverted hammer. Setting up. Look out. US dollar, Swedish krona. We had a hammer formation yesterday. We're near our lows of the day, but remember, there's a lot of time left in today. It's can't put too much into these charts, at the moment. But we'll keep an eye on them. Especially as the euro rallies to 108. I'm actually considering shorting some euro dollar if it gets to 108. I haven't done anything yet, but I'm thinking about it. All right. Let me see if I can take some of your questions really quick. And this is your bias chart for now. Oh, you know what? We might add to the bias chart. I think what we'll do is we'll add the E-mini futures here because let's take a look at them. Okay, here's the E-mini futures that we should actually put it on here because this is so vitally important right now. 2065, 2082. 2065. 2082. We are in a range. But the reason why I want to put that down is because look at the E-minis here. I mean, we break we break here, we break here, we're going to get a ripper going any other direction. Bottom line. Know what I'm saying? So, and we're wound up pretty tight. I mean, we've been here basically for all week. Okay? All week we've been here. That's Monday. That rally on Monday, but we've been here since Monday. So we've just been consolidating these gains all week long. All right. Bonds are rallying. Okay, let me take some questions now. All right, where are we? Where am I? 401. Okay. Because we had to cancel and restart the webinar from earlier. GoToWebinar was having a lot of issues. Thank you guys for all your comments earlier.